Hey, good morning, everybody. Today is Tuesday, December 1st, 2015. My name is Cliff Backus, and this is your pushbuttonstocktrading.com daily video market review. The Nasdaq and the S&P 500 ended the month of November with lower closes on heavier above-average trading volume. The lower close on heavier volume is our definition of a distribution day, adding to the O'Neill distribution count. For the month, the S&P was up less than 0.1%, while the Nasdaq advanced nearly 1.1%. For the session yesterday, small capitalization stocks outperformed large by a very wide margin and continued to outperform on a 10-day moving average basis. This is behavior more consistent with a bull market. Declining issues edged advancers by 5 to 4 on the New York Stock Exchange yesterday. Our market timing model on the Nasdaq is on a buy signal, indicating that both aggressive and conservative traders can buy here, but we shouldn't be increasing margin at this point. The S&P 500 is on a don't buy signal. A don't buy signal indicates that we should have our stops at their tightest levels and we should not be adding new positions to our portfolios. When we have conflicting timing model signals such as we do now, it's generally better for conservative traders to follow the more conservative signal, in this case the S&P's don't buy, and more aggressive traders to follow the aggressive signal, the Nasdaq's buy. The O'Neill timing model, according to Investors Business Daily, is showing a confirmed uptrend in the market with 6 distribution days on both the Nasdaq and the S&P 500. Distribution, or higher volume selling in the market, is a sign of institutional selling, and too much distribution in a short period of time can be an indication that an uptrend is in trouble. Our timing models are giving us mixed signals. Aggressive traders may want to selectively add to long positions, while more conservative traders will want to hold on to current positions and let their trailing stops ease them back toward cash. As always, keep your stops in place on all long positions and be sure to follow your written rule sets. If you'd like some help with portfolio management or with your written rule sets, please feel free to call me. My contact information is on the home page. Okay, let's take a quick look at our spectrum analyzer. What we're looking at here is HGSI, High Growth Stock Investors, universe of over 8,000 stocks sorted by a combination of the most powerful stocks and the most powerful industry groups. We've made a group of the top 100 stocks in that sort. So let's plug these stocks into our spectrum analyzer and see where the strength in the market is. Yesterday, of the top 100 stocks in our sort, 27 were in semiconductor devices, 7 were in application software, 6 from the auto parts industry, 5 from banks, and rounding out the top 5, we had 5 internet media stocks. Semiconductor devices, obviously with 27 of the top 100, would be a good place to be looking for possible opportunities at this point. We've seen a lot of application software recently. We've seen banks and internet media. Let's take a look at what the Nasdaq Composite's up to. Yesterday, the Nasdaq was down 18.85 points, or 0.37%. We closed at 51.08. Trading volume was heavier than the prior day, and also was above average, giving us a distribution day. For you followers of William O'Neill, the market is currently in a confirmed uptrend. We went to a confirmed uptrend on October 2nd. Right now, we have 6 distribution days in the past month on the Nasdaq Composite. Nasdaq right now is bracketed by support down here in the 4,900 area and resistance up here in the 5164 range. But notice how the Nasdaq has been tracking this trend line. This trend line goes all the way back to 2009 and was only broken in August of this year. We're back to holding that trend line up in this area, and I would look for that area to act as support. Our market timing model on the Nasdaq is on a buy signal, which indicates that both aggressive and conservative traders can buy here, but we shouldn't be increasing margin at this point. Let's take a look at what the S&P 500 is up to. On Monday, the S&P was down 9.7 points, or 0.46%. We closed at 2080. Trading volume was much higher than the prior day and was well above average, giving us a distribution day. The S&P is in a confirmed uptrend. We have 6 distribution days in the past month on the S&P. Right now we are bracketed by support up here in the 2044 area and resistance in the 2134 range. The S&P right now is on a don't buy signal according to our market timing model. A don't buy signal indicates that we should have our stops at their tightest levels and we shouldn't be adding to new positions in our portfolios. We should allow our trailing stops to take us out of current positions. Let's take off these markups. I want to review what it would take for our market timing model to go to a buy signal on the S&P 500 right now. There are 3 things that need to happen for the S&P to go to a buy signal. The first is the 10-day simple moving average, which we show here in green, has to be higher than the day before. Secondly, the 21-day exponential moving average, which we show here in pink, has to be higher than it was 2 days ago. We meet both of those criteria. The third criteria is that the S&P 500 has to be at least 1% above its 21-day exponential moving average. We fail on that criteria. And so in order for the S&P 500 to go to a buy signal at this point, the S&P would have to trade above this 1% envelope right here. The S&P 500 is being very stubborn about going to a buy signal, and we are currently on a don't buy signal as we noted before. That's about all I have for today. If you want to talk about any of the stocks mentioned today or any of our market strategies, please feel free to give me a call, drop me an email, or make an appointment. Come by the office, see what we're up to. Contact information is on the home page. Please take a minute to go to our subscription page and subscribe to Push Button Stock Trading. You can also follow us on Twitter at PushButtonStock. Again, my name is Cliff Backus. That's your daily video market review. Have a safe and profitable day. Keep your stops in place, and I will see you again tomorrow. Please stay tuned for our important disclaimers. All the best. Disclaimers. Push Button Stock Trading Video Market Review is produced and edited by Clifford B. Backus. Mr. Backus is a Senior Vice President of Investments, Technical Analyst, Portfolio Manager, and Partner with the investment firm of Ohannes & LaCours Incorporated. Video Market Review is produced solely for the benefit of our clients, friends, and colleagues. Anything written, stolen, and/or plagiarized in this publication is done without malice. Further, the analysis and opinions expressed in this publication are strictly those of the editor and not of Ohannes & LaCours Incorporated, its affiliates, subsidiaries, or any of the officers or employees of Ohannes & LaCours, Inc. On that note, we submit the following. The analysis, calculations, and evaluations presented herein are based on data and assumptions Ohannes & LaCours Incorporated believes to be accurate. Ohannes & LaCours Incorporated makes no representation that such analysis or calculations are accurate or that such valuations represent levels at which actual trades may occur. This report has been prepared from original sources except where otherwise noted, and data we believe to be reliable. Ohannes & LaCours, Inc., its affiliates and subsidiaries, and/or their officers and employees or their families may from time to time acquire, hold, or sell a position in the securities mentioned herein. Moreover, opinions may differ from one entity to the next. If we are used in connection with the purchase or sale of any security discussed in this report, we may act as principal for our own account or as agent for both the buyer and the seller. Push-button stock trading is dedicated to the education of friends, clients, and paid subscribers. Push-button stock trading is an information service only. The information provided herein is not to be construed as an offer to buy or sell stocks of any kind. Push-button stock trading is created to aid subscribers in making informed investment decisions based wholly or in part on technical analysis. It's possible that at this time or some subsequent date, the editors of push-button stock trading may own, buy, or sell the investments presented. All investors should consult a qualified professional before making any investment. The information provided has been obtained from sources deemed to be reliable, but it is not guaranteed as to the accuracy or completeness. The editors of push-button stock trading make every effort to provide timely information to subscribers, but cannot guarantee specific delivery times due to factors beyond our control.